bum, 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 bum. Love of my life.
Let me guess, you want your coffee.
Got that one right.
There you go.
And it must be coffee with Scruff, with Winky, supplier of coffee. It's an odd coffee with Scruff today, guys. We're going to be discussing a lot of mindset. So let's roll the intro and I'll kind of tell you about it.
Matron, take them away.
And a warm welcome to one and all. It's your first time here, the big fella Scruff. And what I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. And today we definitely are. Because when it comes to trading, a lot of it is to do with what's up here.
Are you serious?
You'll always see the flash cash guys. Ah, look at me, I've got $500,000 account. I made all this money.
You ding-dong!
But the chances are they're flashing the plan or they're selling a dream that is unattainable. It takes money to make money. It always has and it always will. Now you can accelerate these through prop firms and sort of hybrid firms like Darwin X and use them in the meantime to build up your own account. But with that said, you still need to know how to trade. And if you can't trade, is trading for you? And that's what we're going to unpack today. Now I'm going to drop a question that was on my Discord. I'm going to take a screenshot of it and show you because there's a lot to unpack. But I've got it here. And as you can see, it's quite a paragraph. So here it is. And it's to Dusty, our resident Baldylocks. So a little salute to you. What he's put down is excellent because we have a Q&A every Friday. And sometimes if the guys can't attend, they'll drop a question in for me to address. Now, what's in this would have taken up the entire session because there's a mass amount to unpack. But what he's asking is perfect and it will answer a lot of questions as to whether or not you should be trading in the first place. So I'll take it through bit by bit, and if I get a bit muddled, excuse me because there's a lot to get into. So the first part of this is, how are we measuring ourselves and our expectations to succeed? Right. So at that point, that bit's very easy to navigate. You use a journal. You've seen my journals, it's that crazy spreadsheet that you see. What information do you put in it? Well, the first thing you're going to be putting in is obviously the trade. I might trade in euro, dollar, cable, whatever. Take a screenshot of it, record it, whatever. The date. How big your account balance was at the time. How much your position size was on the point of entry. Where your stop is or the amount that you're willing to invest in the trade. What is your emotional state at the point of entry? Is it good? Fine. Is it bad? Well, why was it bad? Did you have a fight with your partner where you just got out of bed the wrong way? And then what the outcome is. And then when you see the outcome, if you're lost, you might see a pattern that your emotional state is constantly in a bad mood the days that you lose. So that can be giving you something to work on. Now, it's very easy to say this. It's very difficult to put it into practice because nobody likes to journal. And I'll be interested in the comments whether you journal or not. And I'll be more interested in if you continue to journal. Because when you're winning, everybody wants to put a winner on the journal. Oh, it's grown. Look at this. This is amazing. It's grown, it's grown. Oh, I've lost. I'll start it again on Monday. Or I'll start it again at the end of the month. For my journals, I hardly put in comments on the winners. I'll just put something like a level bounce continuation, just whatever the reason was I was taking, and I always keep a column as to which strategy I'm using, whether it's box theory, golden eye, a push, the river, whatever. They're my primary strategies that I use. And I'll see which one generates the most money. And for me, it's actually golden eye, because golden eye can be morphed into the others as well. Because golden eye is a roadmap, nothing more. You know, just tells you rough areas to get in, but it certainly tells you where to get out. So it's a very, very simplistic system. And I use that one every day. But why do I use it every day? Because the journals told me to. Now the next part of it is, and our expectation to succeed, and at what point should we not have the mindset for this industry? Now that's the big one. Now I'm going to read this a little bit further. If we are not the kind of person to call it a day, how do we set goals? I.e. screen time, placing trades, following rules, setting up charts, eyeing the news, switching markets, is a chart a chart, and with two things that change. Whew, ATRs and spreads.
Jesus Christ, dude.
Okay, let's just wind that bit back just a little bit. So the first part of it is, do we have the mindset to stay in the industry? Well, I've often said the best teacher is you. Look in the mirror, and the person staring back at you will be your best teacher. This industry can be for everybody. It genuinely can. But there's certain traits inside the industry that are better suited to different people. If you're nervous Nelly, and you really, like, take Joanne Winky. She had a go at trading. She loved marking the charts out, seeing the technicals, and sort of understanding what the movement of the markets were. What she couldn't cope with was drawdown. So there was two ways to sort this out for her. You either quit because you can't take it, or you reduce the position sizes. Now, position size is how you measure whether or not you're capable of this job.
No way!
If you're seeing it go drastically against you and you can't cope with it, the position size is way too big. If you still can't cope with it, then maybe this job isn't for you, because it does have an emotional roller coaster. But there's another way, and you do what's called passive trading, passive income. You see that with my Vanguard. Joanne is doing very well with her own personal Vanguard by just following the S&P 500 and the FTSE All World. Very, very simple. It's just drip feeding in, and it's passive. Now that can be diluted down again if you want to be actively in the markets. Swing trade. But don't swing trade less than a daily chart. And then that daily chart becomes very peaceful. You look at it once a day, so you're not stressed through the day. You either look at it first thing morning, last thing at night, and you're looking to see whether the candle is going to break above or below the one that you're looking at, and you'll get a half decent pip count out. So from a mindset point of view, you have to pick your style of trading to suit your personality. Now if you're aggressive, but you can sort of be aggressive under stress, then you can be a scalper, or you can be somewhere in the middle. Personally, I sit in the middle. You know, there are 4 disciplines to trading. Scalping, 1 or 2 pips, you're in and out the market constantly, loads of action, but you only need one bad trade to wipe out your good work. So you need a shred of discipline inside it that once you've been paid, you quit. But you can do the roller coaster. You have day trading, that's 10 pips plus, and you're expecting the trades to run for a couple of hours, maybe 4 hours, and it's kind of one-hit wonders, but you're finished within the day. You've then got your swing trading, where it's anything over 24 hours and you're looking for a decent movement, but it's very slow, you're working on day charts, etc. And then you're finally into passive or position trading, where you're just following an index of the market throughout the year. Now, wherever you are in the scale of personality, you just fit a trading style to suit. So if you're reasonably disciplined but you're calm, day trade. And I think day trading is the way forward all the time because it is a little bit gentler. Scalping is a nightmare, but swing trading can be a little bit slow for me. So I have a separate account that I do swing trades on, so I can still have best of both worlds. So that part of it's quite difficult. Personally, I think trading can be for everybody, but you just have to fit into one of those 4 disciplines. And if you're really nervous, you're passive. If you're really aggressive, you scalp. And if you want to have a little bit of sanity, somewhere in the middle. That's the way I would look at that.
Isn't that logical?
And where it says, if you're not the kind of person to call it a day, how do we set goals? Well, that bit's very, very simple. Mark your chart out and you take it from one section to the next section and you do it in steps. Now, you can also do this with monetary goals. You can go, I want £10 a day. Doesn't sound a lot, but it adds up. It's 50 quid a week, 200 a month, 2 grand a year, allowing you to have 2 months off because you're going to have a month of mistakes and you're going to have holidays. And that £10 a day will pay for the best part of a family holiday or certainly give you a good boost at Christmas. And you're still doing it, generating it. We are doing it with the BlackBull account and it's $1 a day. That's all we're looking for. $1 a day, 10 cents a trade. And the idea is to keep it going and show the process. So we've got that bit. Okay. Now the next part of it is, what are the examples? Screen time, placing trades, following rules, setting charts up, eyeing the news, switching markets, chart as a chart. 2 things. When it comes to that, yes, I am a believer a chart is a chart. I've proved it many times. Tell me the chart, I'll break it, I'll read it, and I'll trade it. And I'll do it any chart, anytime. Because I know what my rules are. So you do need some kind of rules, but you need a framework. So in order to set your goals, you need a roadmap. So the roadmap, you'll see it is my levels. I would like to think I'm a specialist in levels. I'm really good at it. I can draw levels, I pick them out, I can see which fibs are working. That's my roadmap. My goal can be going from one level into the next. Simple as that. And then I've only got one choice to make. Which direction am I going? Am I going with the market? Am I going against the market? But am I going to be right at the right time?
Are you sure?
Very, very simple. Because you can have a downward trend, but it's in a short-term pullback. There's no reason that you can't trade that pullback. Because it might last for a couple of hours. And if it does, you've got enough time to get in and get out. So, rules, definitely. But inside a framework of setting your charts up, market, whatever you feel comfortable with. Now, personally, the easiest way to sort the markets out is look at the market that is open. So if you're in the European session, Euro pairs. You're in the London session, you are pound pairs. You're in the New York session, US pairs. And then when you go into the Asian session, Asian pairs. And that will work things out for you, quite simple. Now, what else have we got?
Well, we're waiting.
Right, so a chart is a chart with 2 things that change, ATRs and spreads. Okay, that comes back to planning and rules, and also the amount of markets you trade. So for argument's sake, if you're trading the DAX, yes, you'll trade it sort of 7 o'clock when Europe opens, through the London session, quite far into the New York session, and its spread will be fine, and it's still got a good ATR. So you can trade that from 7 in the morning through to around 8, 9 o'clock at night UK time. Once it goes past UK time, like 9 o'clock, the spreads do open up and the liquidity dies down and it doesn't move as quick. It still shifts, but now you've got a big spread to cover. So shift gears and look at an Asian index if that's what you're trading. The Australian 200, wait till 11 o'clock, trade that. Wait till midnight, trade the Nikkei. So again, it's horses for courses. You put in the right market at the right time, and that'll help you. Now, the next part of it, because of the movement of ATRs and spreads, the ATR doesn't move that much, but the spreads do. You're right, the next part of it, this creates a sense of excitement and dread and fear. So how are we managing the fear and greed? Okay. As I said, guys, this is a long old message, and it's quite a difficult one to answer and try and condense it together, but I'm trying to sort of give it the best fit. Now, fear and greed in the markets is crucial. You actually need both, but you also have to control them. The fear can help you control your position size. The problem with it is if it's the fear of missing out. If you fall into the fear of missing out, that means you're gambling. That's a problem. But if you're fearful of the size, well, that's good. That means you'll be conservative.
No, it's true. I shit myself.
So you'll pull in your position size, and that'll save the day. Now, the greed side of it, again, is a double-edged sword. You need to be hungry. You need to be greedy to trade, because the one thing you don't want to do is cut a trade short. If it has a potential of 20 pips because that's the space between you and the level, let it run 20 pips. Don't kill it at 7. If you see it pulling back on itself, don't be afraid of it. Let your greed kick in and let it run to the target. But the target has to come back full circle to when we're talking about rules and the right market. If your ATR says it can only do 15 pips, don't let your greed try and push it to 20. Be conservative. Stick at your 15 pips. And these little tips help you all the time, you know. So be hungry for the trade, but not greedy for the profit. Big difference. Your trade is right. You've set up the correct area you're going to get to. And then away you go. Dead simple. Now, when it comes to the rest of it, let's see, we're nearly at the end now. Like, how many trades a day, a week are we looking for? And are we okay if we don't get them? Well, really depends. If you're swing trading, it could be 2 trades a week. Might even be 1 trade a week. And that can be enough. But if you're looking to have a set goal of 100 pips a week, 20 a day, and you find that you can pretty much see a decent trade to give you 100 pips in 1 trade, because the DAX will do 100 pips.
No way!
But you might have to wait till Wednesday to get it, and then it goes to target maybe overnight. So 1 trade could be enough. Now, if you're day trading, which is what I do and what I prefer, 1 or 2 trades a day is more than enough. As long as it's targeted appropriately, you're fine, you know. But what happens if I don't get 1 or 2 trades a day? Is it the end of the world? No, because you're circling back to fear and greed again. I don't want the fear of missing out, because if it's not there, it doesn't matter. I don't want it. And I don't want the greed to make me go to market. So if I don't trade because there's no real setups, nothing really stands out, I'm not going to be frightened of it. And it doesn't matter if I don't get it. So I wouldn't worry about that at all. As kind of final thoughts, what I would say is trading is probably the most emotional roller coaster you're going to go through. In fact, it's probably the most emotional roller coaster you'll go through, because it deals with money. And as my dear Gran would say, money would see you out. And that means it'll show the true character of a person. And it's kind of why money doesn't interest me. I'm not particularly materialistic. I like to have nice things, but only if they're there. If I haven't got them, I don't crave them. And it's why I do a lot of things for different people. But then I see people, and I come across them all the time. They wouldn't give you anything. nothing, but they'll take constantly. It's probably why I have a hang up with freeloaders. I've lost a lot of things in my life, but I've never blamed anybody but myself. And this comes to the emotional journey. If I've got it, I'm happy to share it, but I've also got a cruel streak in me, or a hard streak in me, that I'll share it to those who deserve it. Now, you'll always have people that are friction and they want to take constantly. And sadly, this comes back full circle to mindset of, should you be in this market at all? And the reason there's a big failure rate, and it's normally the freeloaders that are failing. The freeloaders are the ones that fail. They're the ones who complain endlessly, and they're the ones that cause mayhem in the forums, because they won't invest in their education. And I don't mean money. You can accelerate it. You buy into a community or something like that. There's no point buying a course, because all courses are there and they're readily available. But community can help you with the mindset and help you see where you're going. A little bit like a golf coach. You can still play golf, but you go to the golf lesson and you pay him just to shave a few edges off. But you wouldn't rock up at the golf course and expect him to do it free.
If you're good at something, never do it for free.
And then when you look at the people that play golf, the ones who have a good handicap have normally taken lessons and they're quite good at it. The ones who hack the course to pieces and then complain endlessly that, oh, I should be buying the best club, or the ground wasn't good enough, or anything like that, they fail. And then they wonder why they should be doing this. Trading's exactly the same. If you want to succeed, you have to invest. And you invest in time and experience. And experience is the kicker. And that's right the way back to the journal. The journal will show you whether you're good, bad, or indifferent. And that's it. Trading's not difficult. It's not difficult at all. The hard part is you. So, just as a little bit to end this on, mark your levels up right, high time frame levels, because anything below an hour you're wasting your time. Absolutely, they hold a 0 rating in the market, because the people who move the markets don't look at them. So there's no point putting them in. Pick your direction, the dominant direction. So look at a number of factors to understand where you think the market's moving, and then play the averages across them factors and stick with it. And then finally, target appropriately. Now your target is also your risk. You call it risk, I call it investment. I work on ROI, not RR. I don't believe in RR. I think it is stupid, and the best sales get you going. Because when you talk about risk reward in the markets and low win rates, etc., it's the best, like I say, it's the best sales pitch going. You're shit at your job, but you're going to get paid. But you don't. That's why there's a big failure rate. So do return on investment. How much am I putting in the market, and do I have a high opportunity of return? ROI, return on investment. And that's all you do. So you go, I'm putting X amount in and I want X amount out based on a recommended target. And you'll find that from the ATRs, and the easiest way to do it is take a daily ATR, divide it by 3, and then divide by 3 again. That'll give you a minimum target of the day, and I stress minimum. And then you just see if it fits between the levels, and away you go. And then just don't overtrade. So there you go. Quite a voice heavy coffee with Scruff, but trust me, if you're in this for quick money and you're looking at the glitz, oh look at my massive account that's on prop, I want that, you're probably destined to fail. If you look at the markets of, okay, I can see a structure, I can see a level, and I'm going to trade into it, you'll survive. There's no shortcuts, guys. I cherish your thoughts. So as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.